Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee. Joining me are my co-host, CoinDesk Managing Editor of Global Capital Markets, Lawrence Lewitton, and Executive Director of Global Content, Emily Parker. Good morning, Emily and Lawrence.
Good morning. What's up?
Having a bit of a relief rally this morning. Let's take a look. The CoinDesk Bitcoin price XBX index at $39,652. Bitcoin is up over 5% over the past 24 hours. The CoinDesk Ether price ETX is at $29.27, also climbing about 2.25%. And the DFX CoinDesk DeFi index at 229. Soaring over 7% for the day. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as leader in crypto news, events, and data. So, Lawrence, we had the Fed, they confirmed what was highly expected. That's the 50 basis point rate hike. So that's giving a bit of a bounce in the markets, confirming just that what everyone had thought would be baked in.
Yeah, but actually the interesting part is it wasn't just there, but it was also really it's in the alts where you see this kind of like huge moves, right? Or relatively to Bitcoin and even ETH. I mean, I was just looking at the CoinDesk 20 right now, newly reconstituted, by the way, updated for the quarter. Some of the big movers, Loopring, okay, it's kind of a small token, it's up like 14%. You see like Gala and Cosmos, these guys are up like 10%, but then Avalanche and Solana, Chainlink, 5-7%, these kind of numbers. So yeah, I mean, this is you're seeing more of that action in the alts right now than you're seeing it in the majors like Bitcoin, and I think that's sort of like, okay, now we can. Now that we've gotten that behind us, let's start taking on some more risk again.
Also looking at some chatter on crypto Twitter, and we're finding out who helped Elon Musk in his acquisition of Twitter. And we see a whole host of investors, including CZ from Binance, tweeting a small contribution to the cause. Like Binance apparently contributed $500 million, Fidelity over $300 million. Larry Ellison, who's the co-founder of Oracle, contributed about $1 billion. So that's been getting quite a bit of news, Emily.
Yeah, so I mean, the Binance news is definitely interesting. It suggests that maybe some people think that Elon Musk buying Twitter is going to be good for crypto. Obviously, I can't see into CZ's mind, but I would imagine that he clearly sees this as something that would be potentially positive for the industry. Otherwise, would not have made that investment.
Right. Also,
they have a lot in common, because they both had issues with regulators in the past. So maybe that's the bond.
Perhaps.
CZ and Musk.
Also, just thinking over the weekend, Warren Buffett made those comments. He's the Oracle of Omaha. He told shareholders at the Berkshire Hathaway annual meeting that he wouldn't buy all the Bitcoin in the world for $25 because it isn't doing anything. But not all Buffetts are alike, we found out. His granddaughter, Nicole Buffett, is an avid NFT artist in this space, and as luck would have it, she joined us now. Welcome, Nicole, to the show.
Hi. Good morning.
Good morning. So, we were talking about your grandfather's comments and his outlook on Bitcoin early in the week, and it just caught everyone by surprise. I wonder what was your reaction when you heard his comments on Bitcoin?
Well, I mean, it's not a surprise. It's really, this has been kind of a position he's taken for many years, decades, really, on technology. In general, he's pretty old fashioned. He likes to keep it simple. And it's funny, actually, I just received my first email ever in my whole life from him about a month ago, saying how happy he was that I was doing so well. So as much as he may not be into Bitcoin and crypto, I think he's very happy that other people like myself and so many other artists are.
Wow, that's really wonderful. Do you ever talk to him about NFTs and maybe, get in his ear? Maybe he'll warm up to them eventually, the whole crypto space?
Yeah, I haven't really actually yet, but that's coming. There's going to be a perspective show in Omaha, an amazing innovative art space that I'm planning in the late fall. So definitely NFTs are coming to Omaha.
Nicole, how would you explain an NFT to your grandfather? If he thinks Bitcoin is useless, I don't know what he would think the use of NFTs are, but like if you had to sit down to him and explain the value proposition of an NFT, what would you say?
Well, I think that this is really kind of a conversation about the evolution of money and currency and the role that art plays in that this new economy. That's my experience of it, and that's the conversation I would like to have with him. Is that the conversation about what is an NFT is really expanding our view of currency, money, our relationship to what we value, the impact of just the concept alone, and that kind of collective agreement of what value is and what makes something valuable. So the blockchain technology, I think it's just incredible because it's really it's a technology of honesty and transparency, integrity. And thank you for showing. These are my spirit coins. This is my Genesis collection, and I'm calling these the currency of compassion. And I've really just from the very beginning was so struck by the ability that this space, the NFT space, crypto space, in the community has to create impact in our world with this new economy. So that's what I'd like to talk about with him. I'd like to talk about just how he feels about expanding the whole idea of finance and economy in and of itself.
So why NFTs? I mean, I understand, you just explained that, but as an artist, why, what got you into the NFTs in the first place? And why are you doing it in that medium as opposed to others? I mean, are there other medium that you would necessarily maybe work better with if you felt like, what made you gravitate towards it?
So I'm a painter, and so all of my NFT work starts in the physical medium, as from the source it actually is created from, which is in the physical world. I work with paint on paper. I work with a wide range of mediums. So with my work, I always like attaching a physical piece to really pay homage to the full scope of the value of what it actually is, where it comes from, kind of tracing it back to the origin outside of the digital realm. But why an NFT and what got me into the NFT was really, this was like a gateway of connection and an ability to share my work really right in the beginning of the pandemic. And what's happened for me in this space is that, translating my work into the digital sphere has allowed me to open up it's opened it up in new dimensions on so many different levels. First of all, looking at the work on a screen, you're basically looking at work through a light box. So you're illuminating the image. You can move the image. You can layer the image. You can add music to the image. You can collaborate with other artists with the image. It's becoming like wildly dynamic through the form of the digital, which prior to the NFT didn't exist. So it's just been like incredible and exciting. Yeah.
I just want to go back to your earlier point. So I think that, the kind of defense you gave of NFTs would definitely resonate in the crypto community. But going back to the sort of, Warren Buffett's of the world, his whole thing is like, these don't produce anything. Their value is basically defined by the amount that people are willing to pay for it. Like, how do you convince him that that's not true? I mean, if that's even possible, like, how do you convince him that, NFTs or crypto in general have some sort of value that isn't just this big speculative bubble?
I think the value is that it's more people are getting involved in the relationship to what value actually is. It's what's happening is that there's a more inclusionary, the scope of the lens is widening. And, I just think that it's kind of like the drops in the ocean, when enough drops come together, it creates a much wider, a massive body of water that you can't deny has value. I mean, how you channel that and how it's a mutable thing. And there's been kind of a monopoly on that whole concept and that idea. And that's been to the benefit of a very small, few group of the 1% or people in finance. And I think that, again, value is a concept that we decide and we create collectively. The artists and, what I love about crypto and the NFT space is it's a dynamic place where financial, experts, technologists, and artists are getting together to create a bigger entity that, because of this kind of coming together of those three elements, it's a whole new structure of value.
So how did the process start for you in terms of like first getting into NFTs? Like who were you talking to? Who got you into it? How did you first start? That kind of stuff.
So how I started was my boyfriend at the time, Justin Aversano, and G Money were on a Clubhouse, and they were talking about NFTs. It just started kind of coming out. In the new year, I had actually purchased some crypto, some Ethereum, some Bitcoin. About 5 years prior, I was actually at the talk show Hookie Lake's house, and she was talking about crypto to me. So that had been planted in my ear. Unfortunately, I didn't buy any at that point.
Wait. You got to stop right there. You're saying Ricky Lake is into crypto. Is that what you're telling us? Ricky Lake is into crypto. Someone book her.
I hope that's okay with her that I said it. But yeah, she was actually the first person who I heard about crypto from.
Interesting.
So, Ricky Lake, that's awesome.
Yeah. So it's been a while. It's been coming around, but really the pandemic and Clubhouse is what brought me into it.
You also said something really interesting, and I'm just really happy for you, because you said that it was the first that your grandfather had written you a letter a month ago, and it's the first time you'd heard from him for years. And I remember you appearing in a documentary about the 1% on Oprah, and he was really upset about that. So now he's seeing your success with NFTs. Does he now see, I guess, the value, and I guess now, there's that reconciliation?
Yeah, there's definitely reconciliation. I think that for with my family and my grandfather, I come from a whole family of artists. My father's a composer. My grandma was a singer, amazing activists, artists, and thinkers. And I think the thing that excites my grandfather the most, I would say, I'll speak on his behalf in regards to NFTs, is that it's really giving artists a chance to share their work, make a living on their work, express themselves. And I think that's what, I think if there's anything that's going to open him up to the world of NFTs and crypto, it's that.
Wow, that's really fascinating.
I mean, enough about your grandfather. I'm all about this Ricky Lake thing. I'm not getting off of it one bit, because I don't know how you met Ricky Lake. I don't know how that all happened.
All right.
I'm totally fascinated by that. Unfortunately, we don't have a lot of time, but you were talking about Clubhouse and things like that. So what were you listening to? Who were you listening to? And besides Ricky Lake, which is just absolutely like the most remarkable thing I've heard in this whole thing, by the way. I'm really into Ricky Lake. She's really good actress.
She's awesome. She's really awesome. So it was just such an odd time for all of us. We were disconnected and from each other. No one knew when we were really going to get together. And I think it was just such fertile ground for this new kind of wild concept of even just crypto and NFTs to really take hold, because it was just at that point I felt like, hey, I'm willing to do anything to share my work and connect with people, and that's just what it did. So that's when I heard about NFTs, and when it was shared with me through mutual friends of mine, it was really it was just really about, this seems like an interesting opportunity to get my work out there. And oh my goodness, do I have to get on Twitter? Like, oh no. I thought, oh no, I have to get on Twitter.
Horrible place.
Okay, now Twitter is like, what Instagram was when Instagram first came out for me again. So I was never, I was a little slow to Twitter, but
awesome.
Yeah. So,
Lawrence may love the Ricky Lake connection, but I find it fascinating that, your grandfather hates Bitcoin, but he, through his family is going to potentially see the value of crypto through NFTs. So that to me is very fascinating.
Her grandfather wasn't in Hairspray. Never did a John Waters film. I'll just say that.
Okay.
Well, I'll keep you posted. You should, let's see, after the fall, you should, I should come back on and we can talk about the Omaha show.
Oh, wow. I love it.
There. Yeah.
Nicole, what a pleasure. Thank you so much for joining us. And check out Spirit Coins on OpenSea. All right. That was Nicole Buffett, art director and NFT artist. Coming up, we've got the crypto markets update with Bitcoin trading custody and lending firm Unchained Capital.
Hey, I'm Isaiah Jackson, host of Community Crypto and author of Bitcoin in Black America. You're watching CoinDesk TV?
All right, checking in on Bitcoin. The CoinDesk Bitcoin price XVX index currently at $39,652. Bitcoin is rising about 5.3% over the past 24 hours. CoinDesk Ether price ETX index at 29.27, also making gains of just over 2%. The DFX CoinDesk's DeFi index is at 229, also rising about 7.5% for the day. The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem.
Yeah, it's been an update today in the markets, but of course it's the alts that are the star. Joining us now to discuss the crypto markets is Joseph Kelly. He's CEO of Unchained Capital, a Bitcoin trading, custody, and lending firm. Good morning, Joseph. Hello.
Good morning. I'm not Joseph.
Oh, hey, is that Ben? Okay. Ben, is that you? Oh my goodness, that's hysterical. I had the wrong intro in there. I apologize. Of course, it's Ben Emons, none other than Ben, who's of course, one of the great minds of interest rates out there. So, Ben, I apologize for that, of course. But let's talk. Let's get right into it, because you're of course the somebody who knows markets, who particularly knows what the Fed is all about. We saw the Fed raise the interest rates by the Fed funds rate by 50 basis points. That was what was expected. So now we have a market that's kind of put that behind it. What's next? I mean, do you think it's going to continue this sort of steady pace? Do you think that the 50 basis point rhythm, if you will, that we're expecting several rate hikes to go in the future? Do you think that the market's accepting the idea of, let's say, 50 basis points at the next meeting? Or are they kind of hoping okay, well, that 50 is behind us. We're going to see these 25 basis point increments until we get to kind of a point where we've curbed inflation?
Well, Lawrence, what Powell actually did yesterday, if you listen really carefully, he said that the 50 basis point rate hike is on the table at the next two meetings. So it's not like 100% commitment, but that's a strong language, I think, to say it's quite likely they're going to continue to raise rates at least another two meetings with 50 basis points. So that brings the Fed funds rate to closer to 2% by the summer. And then they're going to assess how much of that has had an impact on the economy and therefore inflation. Because as he started a meeting, which I thought was quite extraordinary, he addressed the American public directly saying, I'm going to really take care now of this inflation problem. It's affecting you negatively. it's our job to take care of this. And therefore, we're not only raising by 50 basis points today, but we're looking to raise rates by 50 basis points increments for the next 2 meetings. That gave the market a lot of comfort, gives the market a lot of clarity what to expect, at least for the near term. And then to see what happens then in the latter half of this year, that's, markets will trade it today, right? And not what happens 6 months from now. I think this is why you had that relief rally.
Yeah, but Ben, do you think that
it's good to have somebody on the show who actually understands the interest rates in greater depth? So can you actually, I guess the question here is this relationship between Bitcoin and interest rates even real, right? I mean, that's the narrative, the idea that interest rates, rise, that's bad for Bitcoin. But I mean, is that even true? Is that really what's happening here? So I would love for you to sort of tease that out.
Yeah, I think what you're asking is this, to say the financial relationship, as in, is Bitcoin a asset that you can discount by cash flows? And if you then can do that, if you raise the interest rate, then the net present value of those cash flows changes. So what people have said is like, well, there's clearly a connection between Bitcoin and the equity market, and in particular with the Nasdaq. Unsurprisingly, because we are talking about Bitcoin, you're thinking of blockchain technology, crypto technology, that's more and more widely adopted. So I think it's that correlation that as the Nasdaq reacts negatively to or positively to interest rate changes, that affects then therefore the correlation with Bitcoin, and therefore there's a relationship indirectly between interest rates and Bitcoin. And I think will continue to be this way until we get to a point where, to your previous discussion with the family member of Mr. Warren Buffett, if you look at his stock list that he always invests in, eventually those big blue chip companies that he likes as value will also adopt crypto as a service or part of their way of doing business. And therefore the relationship between interest rates and those stocks and crypto will only strengthen over time. So I think that's the way to look at it, and why you had this rally in Bitcoin too as a reaction to the Fed's outcome yesterday. Interest rates don't go up as much yet, and therefore that was a positive for the stock market, spilled over to the crypto market.
Hey, so Ben, do you think, stepping back a bit, do you think the Fed's got it under control?
Well, that's to be seen, Lawrence, because, they said that they would not actively consider to raise rates by 75 basis points, but they didn't dismiss it either. And I think that is a sign of that the Fed wants to see how much of these 50 basis point increases in the next 2 meetings are going to truly impact inflation. Now, take today's Bank of England decision. The Bank of England started raising rates already last year, but are now in a really difficult situation. They're facing over 10% inflation, unemployment likely to rise, and the economy into contraction next year. And they're hesitant to raise rates faster than what they're doing today, was a 25 basis point increase. Well, hopefully the Fed doesn't get into that situation, because that does look like a kind of an uncontrollable situation of you can't really move faster with rates or slower with rates. It's kind of unclear what they can do to bring inflation down, while then just err on the side of the policy era and say, let's let the economy fall into a recession and then cure itself. Powell did end that way, saying we would rather get inflation under control, right? So, but it's to be seen if they can. So it's quite uncertain still for now.
So nonetheless, you have all these other countries as well raising their rates. And of course, that creates a competition amongst the currencies, right? If the US dollar has high rates, then people flock to the dollar. But then if the British pound has higher rates, they'll flock to that. And so essentially you're creating an arms race when it comes to raising rates. Do you think that perhaps one of the secret weapons of the U.S. To overcome this sort of arms race amongst the currencies is to maybe accelerate quantitative tightening? In other words, sell more of the bonds that it has on its portfolio, thereby raising the rates, because more bonds means higher yields. Do you think that that's a potential way out of it for the Fed that we might see, first of all, to curb inflation, but second of all, to deal with, to strengthen the dollar even further?
I think it's a fair point, because they have put out now the statement that they're going to reduce the balance sheet, so quantitative tightening. as of June, and it will do it in slow incremental steps, to get it up to this maximum amount of 95 billion a month that they have communicated. But could you do that as of June already? That's possible because there's a lot of flexibility to manage that process. And that's what Powell did say yesterday. He said it depends on the economic conditions, how they evolve. So if you get inflation only rising more, get worse, then the scenario of quantitative tightening accelerating is likely. But there's one important difference to make it, Lawrence, is that it's one thing to let bonds mature off the balance sheet and not reinvest them. That's a quantitative tightening. It's another thing to actually say proactively sell the portfolio to the market. And they do keep that option open for mortgage-backed securities. So that's what markets are looking at. Are you coming out and start selling that part of the portfolio to get indeed quicker ahead of this inflation problem that we're dealing with? And that's not clear just yet. So quantitative tightening is here, but it's being done in an incremental, slow fashion for the moment until they see that they need to do this faster. And again, another uncertainty ahead of us.
Mm-hmm. Well, right now we're seeing a bounce in the market. So I was wondering, what's your explanation of the field of green we're seeing right now? And with Powell saying that he expects more 50 basis point rate increases in the future, longer term, how do you think that'll impact the markets?
So the bounce was, I think, very much about a market that was very oversold. And at the moment that Powell said that 75 basis points was not considered, so i.e. off the table, the market was basically being given the expectation that already had priced, a series of 50 basis point increases. And Powell now has confirmed that series of increases. So that's a certainty for the market. I think that's why you're getting a relief, and that's why the equity market was so broad-based rally and with the spillover to crypto, for example. But we're getting the Fed funds rate to a level at some point, starting at maybe 2% by the summer. The real question is, what's neutral here, as they say, the level of rates where the economy is not hot or cold, where we're not in a recession or anything, but where inflation clearly is coming down. And that's not clear. He actually revealed yesterday that this neutral rate is not 2%, what was thought pre-pandemic, but more in the range of 2 to 3%. So I think that we're going to see higher rates from here, not ending at 2%, but maybe ending at 3% or higher, which means that the Treasury market, those yields are probably going to rise not at 3%, but probably more to 3.5%, 4%. That too will, by the way, strengthen the dollar and affect financial conditions, as we say, meaning they will get tighter and will affect equity markets that way negative.
Ben, one thing that I've been hearing people talk about it all of a sudden is the old Taylor rule, right? And if that were the case, we'd see rates at something like 8 to 10%. Do you think that that's feasible, reasonable? Do you think that that's ultimately kind of where we really need to be if we're seeing inflation so high right now?
Well, John Taylor was in an interview yesterday, asked the same question. And so he always says, look, it's a prescription, not necessarily a rule, but it's about the economy, right? Because the rule is constructed out of variables of inflation and employment and this Okun factor, which is about productivity and all these elements of the economy in there. And yeah, it shows that if you were to forecast where the Fed funds rate should be right now, it should be probably at least 6% or maybe even higher, like you said, than 8%. And that's basically saying a prescription, this type of inflation with this low unemployment rate, interest rates should just simply be much higher to get that into some sort of an equilibrium. I think that this is to be seen because we're a really highly levered economy, right? The debt outstanding has only increased, whereas government debt, corporate debt, and consumer debt. So 8% interest rates, so to speak, would really crush the economy, I think, and would lead to what we call deleveraging. So I don't think you end up that high there, but that we're getting in increment steps from, say, first 2% this summer, and then maybe getting to 3% by the end of the year, and then maybe next year, maybe somewhat higher even. I think that's a likely path from here.
All right, Ben. Well, thank you for your markets insight. We got to wrap it there, but that was Ben Emons of Medley Global Advisors. Coming up, checking in with CoinDesk Global Policy and Regulation Managing Editor, Nick Day. Welcome back. Time to check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who is also the editor of CoinDesk's The State of Crypto newsletter. Good morning, Nick. So you have an update on New York lawmakers working on an environmental bill?
Yeah, so this is based on our colleague Cheyenne's reporting over the last couple days. So I'm not sure if we mentioned this, but Cheyenne and I both went to Albany on Monday to attend this rally and speak to some folks there, and a lot of not just the industry, of course, opposed to this, but we're actually hearing concerns from some lawmakers as well, Democrats in particular, who are concerned that this will be seen as being singling out of a single industry, or who are concerned that while this is touting environmental protection concerns, it doesn't really address the concerns at large. So we might actually see a lot more pushback against this bill in the state Senate than than previously was anticipated.
You're talking about the Bitcoin, the ban on Bitcoin mining and proof of work consensus. So what is the latest on where that bill is headed? I thought it had already passed the House and was making its way through the Senate.
Yeah, so it passed the state assembly last week. It's now sitting before the state Senate, and the Senate has a couple different committees that are looking at it. But the first one is the environmental committee, and first off, the agenda for this committee will be published, I believe, later today. So we will know for sure how this committee is going to look at it and when it's going to look at it. But the important part right now is for the committee to take this up for consideration. That's the first step. And if it doesn't happen, this is the last session of the Senate right now. If it doesn't happen, then this bill's going to be put on ice for a little while. So that's kind of the process. And yes, this is a bill that it will seek to ban new or expanded proof of work mining operations that are based on carbon-based energy forms.
Interesting. Also, Massachusetts Senator Elizabeth Warren is writing a letter around crypto. Tell us what that's all about.
Yeah, it seems she's concerned about Fidelity's announced plan to allow retirees to put Bitcoin into their 401ks, or aspiring retirees rather. This is kind of on brand for Senator Warren. She has been a fierce voice on concerns about crypto's volatility and the riskiness of that as kind of a investment asset, as well as obviously her background includes the founding of the CFPB, the Consumer Financial Protection Bureau. So she does have some very strong credence in terms of her investor protection concerns. That being said, these are kind of these are concerns that Biden administration has also expressed. The Department of Labor has also already come out and said, we're a little concerned about Fidelity's plan because this might be a risky asset. People might lose money. All
right. Well, Nick, thanks for monitoring the situation. We'll have more updates for sure in the future. That was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com. All right, that's it for First Mover. Thank you, Emily Parker and Lawrence Lewiton. We do have the tweet of the day. Let's take a look at this from Financial Juice One, the IMF, saying that the adoption of Bitcoin in a Central African country raises problems. Bloomberg also reported this as well. So I don't know, Lawrence Simley, is it a problem to have an alternative?
Well, it depends. I mean, this is, again, a country that doesn't control its own monetary policies. So, whether or not that makes a big difference remains to be seen. I mean, ultimately, what's the difference? We know the differences between the euro and Bitcoin. But for a country that's trying to make ends meet and trying to balance their budgets, et cetera, which, that may be a bit difficult anyway. It's there are bigger issues at stake here.
All right. Well, thank you, Emily and Lawrence. I'm your host, Christine Lee. Meantime, check out The Hash at noon Eastern and All About Bitcoin at 3 o'clock. You're watching CoinDesk TV. Also, next up, stay tuned for the daily forecast to see what's happening in the Asia crypto markets.
The Fed's rate hike has proved to be a booster for the crypto market. Welcome to the daily forecast, May 5th, 2022. I'm Megha Chadha of Forecast, covering all things blockchain. Bitcoin was trading close to the $40,000 mark Thursday morning in Asia after the Federal Reserve announced its biggest rate hike in over 20 years. We'll take a look at the market action plus a whole lot more coming up. Let's get you up to speed from Asia to the world.
Join thousands of NFT traders who already start their day on CryptoSlam.
Let's kick off with the moves around regulation in the industry. First up, Pakistan is taking a fresh look at the cryptocurrency sector. According to local media reports, the country's federal government has formed 3 subcommittees to discuss the future of crypto and related services. Members of the first panel include the State Bank of Pakistan, the Federal Investigation Agency, and the Pakistan Telecommunication Authority. The other 2 subcommittees include the representatives from the Ministry of Information Technology and the Securities and Exchange Commission of Pakistan, among others. Their proposals will be used by a committee headed by the Finance Secretary to help prepare recommendations on the future of crypto in the country. Earlier this year, the State Bank of Pakistan recommended a ban on cryptocurrencies, with one of the nation's largest banks responding quickly by advising its customers to avoid making crypto transactions. Meanwhile, in Kazakhstan, Bitcoin miners have been ordered to file status reports. The Central Asian country is attempting to get a stronger grip on the sector by requiring regular reports to authorities. Data that miners will have to submit includes everything from the locations of their facilities to their power consumption, number of staff, and planned investments. New miners will have to report 30 days before starting operations, while existing miners will need to provide quarterly updates. Anyone shutting down an operation will also be required to report the closure. Kazakhstan became the world's second largest Bitcoin producer last year after miners moved there en masse following China's crackdown on mining. However, power supply issues have made the environment for miners increasingly unstable in the country. You can find those stories and more at Forecast.news. Over in the markets, the US Federal Reserve announced its biggest rate hike in 22 years yesterday, and that saw the crypto market jump into the green. Forecast Lachlan Keller has more.
The Fed's 50 basis point increase creates a target range of between 0.75 and 1%, and it follows March's 25 basis point increase, which was the first interest rate rise since December 2018. Inflation has also climbed to its highest rate in 40 years in the US in March, hitting 8.5%, and Fed Chair Jerome Powell said something needed to be done.
Inflation is much too high, and we understand the hardship it is causing, and we're moving expeditiously to bring it back down.
One expert told Forecast the Fed managed to instill confidence in the stock market as a result.
They've admitted there's inflation, they've admitted they need to get ahead of it. They've kind of, for the moment, put off the 75 basis points. They're saying that's something they're not actively looking to follow, but they've said that another 50 basis points fine, and I think that's what the market really wanted to hear.
Crypto markets also reacted favorably to the move, with Zilliqa leading the charge. It leapt 38%. The rest of the top 100 cryptocurrencies were also in the green, with total crypto market capitalization raising 5.4% and Bitcoin trading at $39,709, while Ethereum was at $2,940 as of Thursday lunchtime in Asia. However, fears remain that the Fed's move has come too late to prevent a recession, but Sullivan says that the situation in Ukraine and the COVID lockdowns in China, as well as inflation proving less than transitory than expected, have made the delay look worse than it was.
I think on the basis that they and most people accept that they're behind the curve, that's why we're seeing them act quite aggressively at this stage.
We'll be keeping watch to see if it really was the right move and whether the crypto market remains in sync with stocks longer term. For Forecast, I'm Lachlan Keller.
ApeCoin, the native currency of the Bored Ape Yacht Club ecosystem, hit a high of over $26 last week amid debate about the coin's governance as well as staking mechanisms. And some of those staking proposals have drawn quite a strong response. Let's talk about how the new economy firms are shaping the conversation. Mark Lamb, Chief Executive Officer at CoinFlex, a leading crypto derivatives exchange and yield platform, joins in to discuss this and lots more. Great to have you with us, Mark.
Great to be here.
Now, staking is a way for ordinary traders and investors to earn a yield on crypto assets they hold. Why has it led to so much debate in case of ApeCoin? Some say that under the current proposal, staking is just encouraging people to hold on to their ApeCoins and not really invest in the ecosystem.
The original idea of staking was that you were going to be doing something with the tokens. So the tokens would be contributing to security in the case of proof of stake or some other mechanism. I think ApeCoin has been criticized for this as well, very constructively by Kobe on Twitter. Is basically that the mechanism is really just a way to pay existing ApeCoin holders a dividend or an income stream of Ape. And the goal would be to get some of these holders to stake, not be able to sell, earn these yield, and allow other holders to cash out, to sell. And so that's not really contributing anything. It's kind of like a bribe to not sell, as has been described on the Twitterverse. And obviously that's pretty silly.
Over 10,000 ApeCoin tokens have been allocated for Bored Ape and Mutant Ape NFT owners. Interestingly, if anyone wants to stake their ape, the coins and the ape are treated as separate entities, and the NFT can be sold without selling the ApeCoin. What do you make of this?
Yuga Labs, the company behind Bored Ape Yacht Clubs, they effectively had this hugely successful non-fungible token, and they had to turn that success, or they wanted to turn that success into something secondary. Also one where if you couldn't afford a BAYC, which, are 6 figures in price at this point, you could afford to buy a little bit of ApeCoin. And so it's kind of seen as a way of expanding the culture. Sort of Bored Ape Yacht Club is a status symbol and a cultural symbol, but at this point, anyone can own a bit of ApeCoin. And so it's kind of expanding that cultural group, and also it's enabling them to capture a different customer base. They had to do that, but they also had to not completely sacrifice or reject or not give value to the Bored Ape Yacht Club, NFT holders. And so there's this interplay between the two tokens that exists.
On the flip side, some say that linking the ApeCoin to the NFT is higher risk, as in case of a hack, you lose both assets, and questions have been raised about the failure to ensure safe custody of Bored Ape NFTs so many times. What can the ApeCoin DAO do differently here?
The reason why a lot of them are hacked is that this is bringing in a lot of new money, crypto folks, new to crypto people who have a lot of money to spend on these NFTs, and they don't have a lot of experience securing their assets themselves on MetaMask. When they come in and they see this type of interface, they're not aware of the risks that come with this type of interface. And so they're not able to say, I should probably be using cold storage. I should probably be using a ledger. Like, this is a large amount of money. I need to keep it offline. That's really something that's quite different about BAYC. It's not that it's any riskier than holding any other coin or any other NFT. It's just that they're high value targets. A lot of them keep them on their profiles on Twitter, and so they're easily identifiable. And then ultimately, they are not clued up on cybersecurity. And so I think this is where there is definitely an opportunity for education. There's a lot of opportunities. There's an opportunity for custody services. And this has really never been a problem before. If you think about people holding very high value digital assets in a very public way. There's a lot of people who hold a lot of crypto, but they're not public about it. There's a lot of people who've, been in the space a while, but they don't flex their net worth on their digital wrist, so to speak.
There's definitely a long way to go in educating people about keeping their digital footprint secure. Great insights as always. Thanks so much, Mark.
Thank you.
And finally, here's a sneak preview of the latest edition of Word on the Block, where we go beyond the headlines. This week, Anthony Scaramucci, founder and managing partner of Skybridge Capital, talks about transitioning from the traditional financial systems to a world powered by crypto.
But owning Bitcoin is a property right.
Right.
That is an asset that can be protected. Now, all the activities
They'll come around.
it.
They'll come around.
You think so?
I do. Yeah, they won't have a choice.
They're already doing CBDC. It's in soft rollout phase. It's probably already being implemented across the country, and we've been reporting on that. Where do you see a bifurcation? I mean, how does crypto kind of create a parallel system? And how do we need to prepare when we take a look
just
at the macro?
again, just think about it from an extension of other technologies, right? We had a horse and a carriage, then we had a horseless carriage. We made the migration over, and then we had to build roads and bridges and tunnel systems to carry those horseless carriages. And so this is the same sort of thing. You're in traditional finance right now. We have these protocols and procedures that can allow you to do things differently. You'll start to see that transition. You'll start to see the regulators catch up to it. And there will come a day where we're transacting with each other without that third party.
The full episode airs tomorrow, so do check it out. And that's the daily forecast from our vantage point right here in Asia. For more, visit forecast.news. I'm Forecast Meka Chadha. Until next time.